This video covers calculating a T account balance, and I'm using Quick Study 2.7, an alternate version of it, as an example. So I've got two accounts here. I've got cash and I've got accounts payable, and I ultimately want to calculate their T account balances. So I'm going to step back to an earlier video and question what type of accounts are these? Cash is an asset. It benefits the future. Cash you would have available to either pay employees, buy supplies, buy equipment, expand your business, those types of things. Being that cash is an asset, assets reside on the left-hand side of the accounting equation. And again, going back to an earlier video, things on the left-hand side of the accounting equation are increased on the left-hand side, which is also known as their debit side, and they're decreased on the right-hand side, which is also known as their credit side. So cash has had a variety of increases and decreases. On my debit side or my increase side, perhaps that they've received cash from an owner investment. Perhaps they've sold a product or service to customers and received cash for it. On my right-hand side or credit side, again, for an asset, that's a decrease. Maybe they're paid employees' wages, they paid rent, they bought in supplies, items like this. But again, ultimately, I want to calculate when I net all of those increases and decreases against each other, what's the resulting balance of cash? What amount of cash do I have available? It's going to do this in two steps. First step, I'm simply going to add up my left-hand side, my debit side. 180 plus 380 plus 100 is 660 debit balance. Then I'm going to add up my right-hand side. 130 credit plus 140 credit is 270. Now your temptation might be to say, okay, I've got a $660 debit balance and a $270 credit balance. You're getting closer. We need to net those against each other to get the ending balance. So I've got a second step here. I'm going to take whatever of those two balances is larger, and that happens to be a debit balance of 660. Subtract from it the smaller balance or the smaller number, and that's 270, and the dollar difference between the two is 390. Now, ultimately, again, you're probably at the point to go, okay, it's 390, I get that, but which side do I put it on? I'm going to put it on the side that is the greatest. So 660 is on the debit side, or left-hand side, it's greater than 270. So ultimately, I have a $390 debit balance or balance on the left-hand side. Again, go back to those rules of normal balances. Cash is an asset. Its normal balance is on its left-hand side or debit side, meaning you'd expect an ending balance for cash to be on the debit side or left-hand side. And ultimately, we're saying here we have $390 of cash available to spend in the future. So I'm going to shift over here to our account on the right, and that is accounts payable. Accounts payable is a liability. It's an IOU to a vendor or supplier for product or services you previously purchased but have not yet paid for. Because liabilities are on the right-hand side of the accounting equation, they are increased on the right-hand side or the credit side and decreased on the left-hand side or the debit side. So again, variety of increases and decreases. Perhaps our $10,400 credit here or increase is from buying product from a supplier, increasing that IOU and we haven't yet paid it. Our decreasers or debits are perhaps paying that bill off a little bit at a time. Maybe they didn't force us to pay it all at once. We're just making installment payments. So we've decreased it once by $2,800 and a second time by $4,100. Again, I'm going to do this as a two-step process. First, I'm going to add up all of my decreases or debits, because again, this is accounts payable on my left-hand side, and that's 2,800 plus 4,100 equals 6,900. My right-hand side's pretty easy because I just had one credit or one increase, and that's 10,400. And again, your temptation might be to list them both on each side, 6,900 debit balance, 10,400 credit balance. But just like we did for cash, we need to net them against each other to understand what is the resulting balance net of each other. So I'm simply going to take the larger number, 10,400, subtract from that the smaller number, 6,900, and it results in a $3,500 balance. Again, which side does that go on? That's going to go on the side where you have a larger balance or you have that larger number. And so it's going to go on my credit side. Again, stepping back, if I think about this, accounts payable is a liability. Liabilities have a normal balance on their credit side. And so as we expected, accounts payable has a credit balance. Its particular balance is 3,500, meaning as a result of buying stuff and owing and making a partial payment, they still have a resulting amount of 3,500 that they need to pay their vendors or suppliers. Now I can change the scenario a little bit. What if we had another payoff of 3,500 or another debit of 3,500? How would that have affected our balances? So if we add up all our debits or decreases, 2,800 plus 4,100 plus 3,500, we have debits to accounts payable of 10,400. That exactly equals our credits. So the resulting balance for accounts payable is zero. I'm going to go ahead and put that on the credit side, even though they're exactly equal, because again, accounts payable is a liability. It normally has a credit balance. So even if it's a zero balance, we're going to go ahead and list that as a zero credit balance. Hopefully that helps get you a jump start on calculating T account balances.